Let's find out how the street is positioning for the election today. Our next guest says beware of some of the initial market reactions and lays out some trading scenarios if either Trump or Harris win. He says currency and gold might see some high-level moves with a Trump victory. With a Harris win, maybe clean energy returns could be higher. Scott Chronert, Citi U.S. equity strategist, joins us this morning here at Post 9. Happy Election Day, Scott. Good to have you.
Great to be here.
No, it's great. You've got like 20 trades in this note today. What are the ones that you are thinking about the most?
I'd say what I'm watching most closely, to be quite honest, are some of the basics, right? We're watching how energy's trading. We're watching how the banks are trading. And I think the small cap versus large cap trade is another, telling trade that we need to keep an eye on here. And, all of them kind of, if you look at the 20 in total, they're all giving you mixed reads on the setup going into this, which is what's made the past month's trading so interesting. We're arguing that you've seen it less in equities in terms of potential election outcomes, but where you've seen this Trump trade unfold has been more in rates, in currency, and potentially in gold.
Is the consensus that you sell a Donald Trump rip and you buy a Harris dip?
That's our view. Okay, now the spin here is pretty straightforward when you think about it. In our view, the S&P 500 is fairly valued around current levels. You're 24 times trailing, 22 times forward. And what we're getting at here is that we understand that there's the animal spirits that come with Trump, more pro-business, got that. But your starting point is a fairly extended valuation circumstance that's predicated on very strong earnings growth follow through into 2025. Our concern is that with that setup, you go into a Trump win and you introduce tariffs into the discussion. Now, to the earlier point on supply chain constraints, we've got something similar to that unfolding. And so what ends up happening is that the 25 growth expectations, we think, become a bit more suspect as we navigate tariff actions.
So you're tying supply chain disruptions, or I guess linearity to tariffs.
It's the same sort of impact, right? We have to start looking at every company in terms of its cost of goods sold or its path through, what they're going to be able to, eat themselves, a gross margin versus pass through. And all of it potentially plays into this. Trump and tariffs has a little bit more of an inflationary spin to it. I don't go down that path so strongly. I'm more of the view that what it does do is create some uncertainty around the earnings projections going into 2025.
I feel like there's more of a wild card on a Harris win. I mean, because the Trump trade has been what's been in the market. We've seen glimpses of it, right? Higher long-term yields, better stock prices, consumer discretionary gets hurt a little bit because of tariffs. But what about a Harris win? I'm not fully clear. Are you clear on what the economic policy would look like as it pertains to different sectors of the market at this point? Or do we have to wait for her appointments to signal whether she's going to be moderate or not?
It's Harris and sweep or split, right? So essentially, the way we first modeled it is that if it's Harris and sweep, then you'd probably have higher chance of tax rates, corporate tax rates moving higher. And that's a very clear path towards earnings degradation going into 2026. That was fairly straightforward.
Dem sweep, which is the least likely scenario.
Which is the least likely.
Yeah.
So you go Harris and split, and it becomes sort of right now versus that the Trump tariff setup, the least onerous. Okay. So if the presumption is that there is some Trump win priced into markets, and you get a Harris plus split, then, yeah, our view, Carl, is that you'd see the market pull back. But from a fundamental perspective, that's less onerous, and so we're more inclined to want to buy into that.
So tax policy, though, a lot of it will depend on divided government. In other words, keep an eye on the House, for example, and whether it goes Republican to Democrat. Correct.
So essentially, what can you get done in a split Congress? Maybe you can nudge tax rates up a little bit, but probably not the 21 to 28%. That was sort of the platform position, in the broader, Harris, policy approach.
Right.
It's been argued that of the four scenarios, right, sweep either way, split either way, three of them are stock bullish. Would you agree?
Mostly, for the most part. But again, we just have to be sensitive to, again, our view on this is try to steer clear of a lot of the social issues that may, to Sarah's point, end up influencing the outcome. My role is much more fundamentally focused. And so when we look at the fundamental influences at work here, that's the way we're thinking about it. It really comes down to Trump and tariffs and Harris and taxes.
With tariffs being a more immediate function.
More immediate because you can get things done for 25 impact. Any tax changes are probably more likely associated with TCJA expiry at the end of next year, so they become a 26 influence.
Right.
I mean, our modeling, going back to Harris and and taking both, sort of a blue sweep, was that you could see 26 earnings expectations go from current consensus of plus 12% down to 5%. So it's that magnitude that you would have to begin to price in. Now, you have to kind of go back to how does this really work? Well, you price it in. Then once you got your new normal, then you're off and running on traditional fundamentals again. And that's where we are, I think, with both each of tariffs and with the tax issues.
That's why this week's going to be so influential. Scott, thanks. Good to see you.
You bet.
Scott Chronert, Citi.